Okay, everybody, it's me, Gregory Mannarino, and this is my post-market wrap-up on this Thursday, January 28, 2021. Remember this date. Remember this date, people. What happened today is a crime. A crime still in progress. What am I talking about? Retail investors, people like you and me, got shut out of our accounts today. Not allowed to trade certain assets. Meanwhile, the investment banks, the hedge funds, no restrictions whatsoever. This is supposed to be a level playing field. Obviously, it's not. I mean, if you needed any more proof of it, it's right here. Okay? The fact that today brokerages locked people out of their accounts, froze their accounts, cost retail investors, I can't even imagine how much. I'm already hearing from some people who have lost staggering amounts. Staggering. Here's my worry here. Problem, reaction, solution. This thing here smells fishy to me. All right? When you see movement in stocks like these, GME, AMC, there's a lot of speculation as to what's causing it. But the fact of the matter is, this was allowed to manifest itself. So let's see now, Congress or the powers that be will put a tighter stranglehold on whatever's left of a free market. I can't even say we have a free market anymore. But what we witnessed today should never have happened. Never have happened. I mean, it's an incredible thing. I thankfully did not get caught in any of this. I'm not in any of these wildly speculative stocks. But that doesn't mean people shouldn't be allowed to do it. You understand? Like I said, Wall Street, the investment banks, the hedge funds, no restrictions whatsoever. Let me put that together for you. If a Wall Street investment bank lost $1 single by not being allowed to trade, what do you think would happen to the brokerage that they went through? Obviously, this is why they set things up the way that they do here. But today, we witnessed maybe whatever is left, the death of whatever is left of a free market. We have no free market. It's a managed market. I've beaten this to death over the years here, and it's pretty freaking ugly. Anyway, I just wanted to get this out here. Remember today's date. Let's see what they do now. Let's see if Congress uses this as an opportunity to take whatever's left of a free market right out. I would not be surprised about it. This is not going to lead to more freedom. It'll lead to more regulation against the retail investor. While the Wall Street banks and the hedge funds can do anything they want. They got too much money. They got too much money. All right, anyway, so let's talk about this market a little bit more. So the nice rally on Wall Street today, nice rebound from yesterday. No surprise to you. I think, I believe sincerely, yesterday was a blip on the radar. Easy money is going to keep poured into this market. And today, we heard from the Federal Reserve again, who says that it's not lower rates that are pushing up stock prices. Let me put a perspective on that for you. That's exactly what it's designed to do. When the Federal Reserve artificially suppresses rates, it allows investors to speculate wildly in the stock market. And so you get bubbles. So when you hear Fed Chair Yellowstein today explain that it's not suppressed rates that have inflated a bubble in the stock market, you know what he's trying to tell you is, yeah, suppressing rates has inflated a monster bubble in the stock market, and it's not going to stop. I can't even believe that he had the balls to actually say that. It's incredible. It really is. But again, in this environment, this twisted environment, what else would you expect? I mean, today, we found out that another 847,000 people became unemployed. Today, we found out that GDP, U.S. GDP, missed its mark. and stocks rally. The worse the economic news gets, the faster the economy free falls, the higher stocks are going to go. You understand? That's how it works in this environment. It's not real. It's fake. It's twisted. And I'm wondering, after what I saw today, if you and me need to literally just get out of it. Get out of this market. Because if they could pull off what they did today, shutting people out of their accounts, not allowing them to trade, only close positions, well, it's a crime. It's a crime, seriously. And I just wonder what they have next. It's epic. Absolutely epic. All right. Silver put on a nice gain today. Gold fell into some pressure. Dollar a little bit lower. Crude oil was higher, then finished lower. 10-year yield came up 1.05. That's where we're at. People, this market, it's primed to go higher. Okay? Cryptocurrencies are getting bid higher by the Wall Street hedge funds. That's the truth. I told you about this. Look, once in a while I get information that maybe I shouldn't hear. And I pass it right on to you. I pass it right on to you. I told you that I had direct information that the hedge funds started buying Bitcoin at that recent low. They're not going to stop doing it. They're going to buy again. You understand? They're putting a floor here. I'm not guaranteeing you that Bitcoin's going higher. But I'm telling you, you got some big players out here that are buying it. Hey, you know what? I want to be on the same side of that equation. I don't know about you, but if the big money players are buying something, generally I want to buy it too. And again, I talk about this all the time for you. Look, I think in the face of what we've seen today with regard to brokerages deciding who can trade and who can't, just by a push of a button, that's a warning sign. That is a warning sign. And again, I'm worried. It worries me to see what Congress is going to do. Problem, reaction, solution. It's always the same, and it'll never change. All right, people, look, I'm going to let you go. Please let me know what you think about all this. Please share this video. Get it out there. See you tomorrow.